Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the endless stream of corporate filings. Today, we're diving deep into K.L.A Corporation's latest report, and let me tell you, it has got some interesting numbers and even more interesting risks. We'll break it all down so you can understand exactly what is going on behind the scenes. Before we get started, if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a fantastic Discord community linked in the description below where you can chat with fellow analysts and get even more exclusive content. Alright, let's jump right into what K.L.A Corporation, the company, has been up to. This is their quarterly report, which means it gives us a snapshot of their financial health over the last 3 months. First up, we have the balance sheet, which is like a financial snapshot of everything the company owns and owes. As of the 30th of September 2025, K.L.A Corporation had total assets of about $16.3 billion. That is a pretty solid number. They also report liabilities, which is what they owe, at over $11.3 billion. What is left over for the owners, their stockholders' equity, is just under $5 billion. Now looking at debts, they have long-term debt of nearly $5.9 billion. This is a significant amount, but they also have substantial assets to cover this. Let's look at their accounts receivable, which is money owed to them by customers. As of the 30th of September 2025, this figure stood at about $2.28 billion, a slight increase from June. This means customers owe K.L.A Corporation a bit more money now. Next are inventories, the goods they have on hand waiting to be sold. This number is over $3.3 billion. That is a considerable amount of product, and for a company that sells complex technology, it suggests they are keeping a good stock of parts. On the asset side, their total current assets are over $10.9 billion, which includes their cash and marketable securities. That is a very healthy chunk of liquid funds. Now, shifting to liabilities, their total current liabilities, meaning what they owe in the short term, are just over $4 billion. This is well managed when compared to their current assets, showing good short-term financial health. Moving on to how the company performed financially, we have the statements of operations. This tells us about their revenues, expenses, and ultimately their profit. For the 3 months ending the 30th of September 2025, total revenues were about $3.2 billion. This is a significant increase from the $2.84 billion reported in the same period last year. That is a roughly 13% jump, which is excellent news indicating strong demand for their products and services. Product revenues specifically saw a 12% increase, while service revenues grew a healthy 16%. The cost to generate those revenues, their costs of revenues, increased a more modest 8%. This means they are becoming more efficient in delivering their products and services, leading to a better gross margin. And the big number, net income for the third quarter of 2025, came in at a very impressive $1.12 billion. This is a substantial increase from the $946 million reported in the same quarter of 2024. That is a nearly 19% boost in profit year over year. This translates to a diluted net income per S-share of $8.47, up from $7.01 last year. This is a sign of strong profitability and value for shareholders. What is interesting here is how they are managing their costs. Their gross margin improved to 61.3% from 59.6%, showing they are either selling products at better prices or managing their production costs more effectively. This is always a good sign for a company. Now let's look at the cash flow statement. This tells us how much cash the company is generating and how it is being used. For the 3 months ending the 30th of September 2025, K.L.A Corporation generated about $1.16 billion from its operations. This is an increase from the $995 million generated in the same period last year. This strong operational cash flow is key to funding their growth, paying dividends, and buying back stock. In terms of investing activities, they used nearly $410 million. This primarily went into purchasing securities. This indicates they are investing some of their surplus cash into financial instruments. Financing activities show a use of over $881 million. A big chunk of this went to repurchasing their own stock, over $545 million, and paying out dividends around $254 million. This shows they are actively returning capital to their shareholders. Looking at their liquidity at the end of September, they had a very comfortable $1.95 billion in cash and cash equivalents, plus another $2.74 billion in marketable securities. That is a total of over $4.68 billion in readily available funds. This provides a strong safety net and allows them ample flexibility. Now let's touch on some of the risks and commitments outlined in the report. K.L.A Corporation is organized into 3 main segments: semiconductor process control, specialty semiconductor process, and PCB and component inspection. The semiconductor process control segment is their powerhouse, making up about 90% of their revenue. Geographically, China remains a significant market, accounting for almost 40% of revenues in the September quarter of 2025, though it is a slight dip from last year. Taiwan, however, saw a massive surge in revenue, up 72% year over year, now making up nearly 25% of total revenue. This is directly tied to investments in advanced chip manufacturing for AI. Japan also showed remarkable growth, with revenues up 57%. On the flip side, North America saw a significant drop of 41% in revenue. This highlights a global shift in customer investments. Now, let's get into the risks. The company explicitly mentions the ongoing impact of US export controls on technology sold to China. These rules are getting more complex, with new regulations being added frequently. Compliance is a challenge, and failure to get necessary licenses could significantly hurt their business, potentially leading to lost revenue and even legal penalties. They are also heavily reliant on suppliers, especially for rare earth elements, and any supply chain disruptions, particularly from China, could be damaging. Taxes are always a hot topic, and K.L.A Corporation's effective tax rate increased in this quarter, partly due to new legislation like the One Big Beautiful Bill Act. While this legislation aims to boost domestic research and other areas, it can also impact how the company calculates its taxes. They are also closely watching global tax changes, like Pillar 2, which aims for a 15% global minimum tax. These international tax shifts can add complexity and potentially impact future earnings. And now, my take on K.L.A Corporation based on this filing. K.L.A Corporation is clearly demonstrating strong financial performance with significant revenue and profit growth this quarter. Their operational cash flow is robust, and their strategy of returning capital to shareholders through buybacks and increasing dividends is commendable. The company's focus on leading-edge technologies, especially with the AI boom, positions them well for future growth. However, the increasing complexity and geopolitical risks associated with their China operations and supply chains are substantial. Navigating these regulatory and geopolitical landscapes will be critical. Their heavy reliance on China for both revenue and critical components presents a significant vulnerability. While their diversification efforts are underway, the potential impact of trade restrictions and supply chain disruptions cannot be understated. Their strong financial position and solid market leadership provide some buffer, but they must continuously adapt to these evolving challenges. A key opportunity lies in their increasing service revenue, which provides a more stable and recurring income stream. Overall, K.L.A Corporation appears to be a financially sound company with a strong market position, but they face significant external risks that could impact their future performance. Alright, that is our breakdown of K.L.A Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives like this. And don't forget to join our Discord community linked in the description below for more exclusive content and discussions. Thanks for watching, see you next time.